Good evening, friends. Today I have an update with regards to Welspun Enterprises Ltd. Currently, the market cap of the company is 7,122 crores, and it has an order book of 200% its market cap, which is nearly 14,000 odd crores. You can see its civil construction sector is expanding rapidly, expected to reach about $1.4 trillion or 25.3 trillion rupees by 2025, growing at 11.2%. So the rupee figure doesn't seem to be very correct. Ideally, it should be 125 trillion rupees. I think there's a slight mistake from my side here. So if you take the exchange rate of 85 plus you add another 40 trillion gives you about 125 trillion. So it should be 125 trillion. So please ignore for the mistake. Growing at about 11% annually, contributing to 9% of India's GDP, approximately employing 71 million people, that is 7.1 crores as it stands in the matrix that is used throughout India. As the second largest employment sectors, it plays a pivotal role in driving national infrastructure development and economic progress. Current price of about 515 rupees, surge of 4%. Welspun Enterprises has an order book of 14,300 crores. Its led by portfolio is led by water projects 62%, followed by tunneling, WMEL roads. Around 93% of the order book is from external sources, ensuring strong revenue growth visibility. Order book has diversified from FY17 to Q4 FY25. In FY17, 96% of the captive HAM projects, the by Q4 FY25, the share of captive HAM fell to 7%, while water EPC 32%, water O&M 31%, tunnel EPC 13%, WMEL 13% emerged as the major contributors, indicating strategic diversification. Looking forward to company's financial performance, revenue magnified by 24% from 821 crores in Q4 FY24 to 1021 crores in Q4 FY25. During the same period, profit jumped by 35% from 78 crores to 105 crores. The company aims to be a tech-led water solutions provider focusing on treatment, distribution, and OEM with global partnerships and smart operations. It also plans expansion in transmission, municipal utility tunnels in transportation. It targets bought toll projects, strategic tunnel collaborations for road, railways, and metro stations. Met Welspun Enterprises is an India-based holding company, operates in road and water infrastructure industry with investments in oil and gas space. The company operates through two segments, infrastructure and oil and gas. Important disclaimer: all investment and opinion recommendations mentioned are solely those of the respective experts, broking houses, and rating agencies. The views do not reflect any opinion or advice. Stock market investment carry inherent and risk of financial loss. Investors must exercise their own judgment and conduct proper due diligence. The author bears no responsibility for any loss resulting from decisions made based on this article. It is strongly recommended to consult a qualified financial advisor or broker before making any investment decisions. So this is the current price, 4.34% up as of Friday, 16th of May. 4% value add in the last 5 days, 0.83% value add in the last 1 month, 16% value add in the last 6 months, and almost 40% return in the last 1 year, which is a great job by the company. So again, here you can see here, uh, this is updated slightly, very slight variation. Uh, the low and high, 52-week high, 664 and 357. Ownership strength is meeting the benchmark. Stock is at a premium valuation. Company can improve the use of its assets. Company possesses stable growth and manageable debt. Price to book value of 2.65, which is very good. Face value 10 rupees, book value 195 rupees. Dividend yield 0.58%. Cash 427 crores, debt of 180 crores, promoter holding 55%. Earnings per share for the last 12 months is 22 rupees. Sales growth of minus 8.5%. Profit growth of minus 63%. Return on equity 11.68% and return on capital employed is 15.5%. Welspun Enterprises Ltd, formerly known as Welspun Projects, is a part of the USD 2.7 billion Welspun Group. Company operates in infrastructure space with investments in oil and gas. Infrastructure space, WEL is focused on road and water sectors, while the company's main focus is on hybrid annuity model HAM projects as a developer. It also takes up value accretive projects in BOT toll and EPC space. Current price 518, then return on equity of 14%, return on capital employed 18, book value 18,184, stock to stock P 20.5, which seems to be good. Company has low return on equity 13% over the last 3 years. Working capital days have increased from 74 to 118. Debtor days have improved from 44 to 34 days, which is a good sign. Company has delivered good profit growth of 19% in the last 5 years. Then these are some of the peer comparisons in terms of market cap and in terms of price to earnings ratio. Some of them are as low as 11 and some of them are as high as 70 or 68. What is important is to check the return on capital employed. ITD cementation 28, Afcons infrastructure 23, NCC 22, rail because almost 19, Welspun is at 18. So those are the companies that you can look at. Aircon also is at 18. So again, apart from the return on capital employed, you need to check the financials for the last few years, the last few quarters, and also the growth rate of the sector, companies, overall market share in the sector, which is important consideration before making any investment decision. Ideally, would suggest you to consult an expert. A financial stock advisor would be able to give you the best information on this. You can see from revenue perspective, the sales have been inconsistent. However, compared to one of the previous quarters, you can see there has been a 120 crore jump in revenue comparative to the June quarter, which is a good sign. Net profit has gone up, but not meeting the June quarter's net profit ratio. Earnings per share is 6.83, which is better than the previous two quarters, however, not matching up to the June quarter. So, something that the market would be keeping a close track of. Year on year sales growth in the last 4 years, the sales have grown by 2.7%, which is a very good sign. The net profit has also grown drastically, but it has been slightly inconsistent in the last 2 3 years. However, overall, you can see there has been a steady growth in the net profit of the company. Then you can see sales growth 25%, profit growth 19%, stock price growth 30%, and return on equity 14%. Those are the last 12 months results, which is what is important at the moment. Reserves have increased by 200 crores in the last 1 year, which is again a good sign. Liabilities overall have increased by 170 crores, 180 crores. Borrowings have doubled, which is a negative sign for the company. Double borrowings means higher interest payment cost impacting the net profitability of the company. So something that the company would need to keep a track of. As long as the returns are higher than the borrowing cost, then it is worth the effort and time invested. Overall, debtor days, as you can see, there is an improvement of 20 days. Days payable have gone up drastically, taking time to pay its suppliers and creditors. Inventory days have reduced, which is a good sign again. Working capital days have increased by about 30%, which is not a great sign. However, return on capital employed has improved in the last 2 years. FIIs have a 4.16% holding, DII is 9.43, public uh, holding has reduced to 29.87%, which is a sign suggesting that more domestic institutions or direct institutional investors are investing into this stock. Promoter holding is steady at about 55%, which is again a good sign. Though there has been a slight improvement, 0.8% increase in the last 2 quarters in promoter shareholding, which again is a very good sign. Overall, price fluctuation and volume of the sales of the share would be high. The stock can easily go into the oversold zone because of the high public holding if there is any sort of negative sentiment in the stock. So friends, thank you for watching. Please share this video with your friends, family and associates so they could also benefit from this information. Please continue sharing your valuable insights into improving the content of this video. Thank you for your time. Wish you a good, happy week ahead. We'll connect with another video very soon.